Financial. August 20th, 2024. I have a busy day ahead of me, hence the very, very different time than I'm normally coming on. It's around 8:08 a.m. Pacific. Generally, we come live at 10 a.m. Pacific, but I have a busy day where I'll be spending most of it out in Napa. We have an opportunity to meet with potential clients, myself and Brandon, who's our account manager based in Napa, to talk through how we can help them with their accounting services. That will then lead into grabbing some lunch with him, and I'm also going to meet up with another potential referral partner after that, grab a cup of coffee and see how we can work together. I'll then head home, and I've got some soccer coaching to do. Week 2 of the soccer for the season, and this weekend we'll start our first game. So busy, but a good way to spend it. But I did want to, keep to my routine, make sure I'm here for you guys, share my thoughts and knowledge. And this week's, is a total divergence from what we've been speaking about, right? Like we've been talking a lot about speaking up, finding our voice, asking for help, building resilience. Today's episode is based really more on a conversation that I've seemed to be having with a lot of people in the last 2-3 weeks. And a lot of it goes into the terms of what services do you offer and why are you not a fractional CFO? So what services does Protea Financial offer and why do you not offer fractional CFO services? So if I start with the second portion of it, Protea Financial does not, and I repeat, does not offer fractional CFO services. And I've been very clear on that since day one. And honestly, probably to the detriment of who we are, because in my effort to underline and emphasize that we do not offer fractional CFO services, I've most likely undersold the services we do offer, to the point that I believe people believe we are a bookkeeping company and only do bookkeeping. Now, if you know me at all, bookkeeping for me is absolutely critical. It is the foundation of good accounting services. It's the foundation of good financial information, and it is the basis of creating a history that allows you to make better business decisions. So get it straight. I'm proud that people think we're a bookkeeping service. Happy, and it definitely is something that we offer. But I think what's been lost, because I'm so adamant not to use the word CFO, that we all just forget about there's a lot that happens between bookkeeping and CFO level services. And we do all of that up to that CFO level service. And you'll probably want to know, why don't I want to use the CFO level service? And it's very easy for me. A CFO is a strategic element of a business that makes business decisions. We do not make strategic business decisions for our clients. We might provide them with the information to make a better question, but we don't answer those questions for them. We just provide them the tools to be able to make a decision by themselves or with the help of another professional. If I head over to my friend ChatGPT and I ask the question, what is a CFO? It gives me the answer that says a CFO is a senior executive responsible for managing the financial actions of a company. The CFO's duties include tracking cash flow, financial planning, analyzing the company's financial strengths and weaknesses, and proposing corrective action. They are often responsible for overseeing the finance and accounting departments and ensuring that the company's financial reports are accurate and complete on time. The CFO plays a key role in the strategic planning, merger and acquisitions, risk management, making them crucial to overall success and financial health of the business. So listen to that part: a key role in strategic planning and making them crucial to the overall success. So True CFOs are making business decisions based on the information. They are making sure they get the information and using it to make decisions. If I go further and ask the same question, what is a fractional CFO? It says that a fractional CFO is a part-time or contract-based CFO who provides the same expertise and services as a full-time CFO, but more flexible basis. The arrangement is often beneficial to small and mid-sized businesses that need high-level financial guidance, but do not require or cannot afford a full-time CFO. Fractional CFOs typically work with multiple clients, offering their services a few hours or days per week or month, depending on the needs of each business. Their responsibilities can include financial planning analysis, budgeting, cash flow management, fundraising, strategic financial advice. This allows companies to gain access to experienced financial leaders without the cost of a full-time executive. So executive was thrown around there. A CFO and even a fractional CFO is part of your executive team. I was at Scaling New Heights in the summer, and Joe Woodard explained a fractional CFO as somebody that would have a business card with their name on it, but the business card would be that of the client. They would be seen as a part of that executive team. We are not that. And honestly, there's probably 90% of people out there that say they offer CFO services that are not CFOs and probably not giving you CFO level services. And because there's so many times where the word CFO is overused, it's thrown me to the far opposite spectrum to say, we don't offer CFO services. And I promise you, we tiptoe around the edges of it because we do budgeting, we do forecasting, we do financial analysis, we do stakeholder communication. But we're not making executive decisions for that business on how to run their business. We're taking it just a step closer. Think, financial director, head of finance, controller. I like to use the word controller plus. Our team goes from bookkeeping to controller. We record your history. We help you with the day-to-day. We do a little bit of compliance. We talk to your stakeholders, insurance companies, bankers, investors at times. We give you reporting. We'll have conversations with you about what your information is saying, but we do not make that decision. We are not a part of that executive team making those decisions. And if you are hiring somebody that is supposed to be your CFO, you should hope that they are providing you with the ability of having somebody that helps you make the decisions and effectively says, this is the best option to go forward. A CFO really needs to be seen as an executive in your business, and it is very hard for somebody that's just part of your regular accounting team to be making those decisions. It's very hard for them to manage a bookkeeping team and still be the strategic resource. What they should be doing is getting that information from a controller level person, asking questions, analyzing, and then making decisions. They should be used to map the strategic success of your business. If you're spending money on a fractional CFO, full-time CFO, strategy should be the word that you're thinking about. Not compliance, not the backwards looking stuff. A little bit of forward looking, but very much big picture strategy. What are we going to do in 3 months, 6 months, a year, 3 years, 5 years? Now, if we go a little deeper into it and you look at what are the main tasks of a CFO, you will see financial planning and analysis. But most of the time, even though a lot of fractional CFOs will do the mechanical work, what they're doing, generally speaking, is providing the inputs into the model so somebody can build it, reviewing it with a strategic mindset and making adjustments based on conversations they're having with other executives in the business. They're not just number crunching and hoping for the best. They're having conversations to match the strategic goals of that business. Another thing that they will probably be working on is cash flow management. Really important. As at Protea, we do a ton of cash flow management. This year, more than ever, we're doing more short-term cash flow forecasts, 1 to 4 weeks out. Do we have enough cash right now to pay the debt we have due, or do we need to draw on other lines of cash flow? What a strategic partner will do, will look at that holistically, understand the strategic moves and expenses coming up, and make decisions on, do we need to go out and raise more capital? Do I need to talk to the bank about changing our debt lines? Is there some other type of adjustment we can make to these expenses to better manage our cash flows? They'll definitely be involved in financial reporting, but generally speaking, what they're doing is from the big picture. They're getting the reports from a team and then saying, here is the notations on those financial reports. These are the things that I'm seeing. This is how it's affecting our strategy, and this is how it's affecting our long-term goals. They're aiming at the executive level, not at the big picture, not the long written, the short executive summary. They're 100% involved in risk management. They're looking at your business and figuring out where are the financial risks and how can this affect our profitability and stability of this business. And then they're using conversations with other executives to figure out, how do we implement controls, get insurance, get compliance, change our strategy to make sure we're mitigating those risks and give us the best opportunity for profitability as well as stability. With the cash flow stuff, they're definitely looking to capital structures, making those decisions. Is this debt equity? Is there a different way we can go about this? Is there adjustments we can be made? Should we be paying down certain debt, using other debt to fund it? A lot of the time, they are involved in stakeholder communication, main point of contact with analysts, investors, stakeholders. And when it comes down to a sale or a business deal, they are in front line having those conversations. They're also looking at investment management. So you think about those companies that have huge cash surpluses or at times have large number of cash available. They're looking at best ways to use that capital to best get outcomes for the business that, one, matches the strategic outcome, but also make sure that you're getting the best return on cash. It's easy for me to tell a company, hey, there's going to be times every year because you have a winery release, let's drop that money into some sort of note or floating line of credit where you get interest back on it. It's different to go, hey, I know we're going to have long-term portions, we're going to invest the money. Or we've got a lot of foreign transactions, so we're going to hedge our funds because we think the forex is going to go away. They are very involved in making sure that the investment portfolio of businesses are ideal and meet the goals of the business. Now, obviously, this is one thing that doesn't show up for a lot of businesses. We're in the wine space, not a lot of excess cash flow. But when you get to those bigger businesses, there definitely is. Do we buy that piece of land or we continue to lease it? Do we put more money into it or we just dig it up and put new vines in? That type of investment management is very important. It's something that a fractional CFO can do. They're involved in your tax planning. They're having conversations with your tax provider, not just on what the numbers are, but what the numbers mean and how can we minimize our tax liabilities going forward. They help with the guidance of your tax provider to build strategies to optimize your tax outcomes. They obviously are, overseeing the whole accounting team. Like at the end of the day, the buck stops with them, so that is very important. Though a lot of the times in a fractional situation, they'll provide more leadership and guidance rather than the true operational efficiency oversight, managing those relationships. They might come in and do some performance management, especially for the level straight below them. But most of the time, it's really just a pure leadership figurehead position in a fractional sense. If it is a true CFO within your business, it does become a little bit more of a hands-on approach and is responsible for that team's performance and making sure that that team is being efficient, effective, and making sure that it aligns with the strategic goals. Are we too heavy? Are we too light? If we're growing, do we have people in the right place at the right time? But the number one thing that a CFO can do for your business is provide strategic financial leadership. Most of the time, The CEO's right-hand man is that CFO. That CFO is providing them with strategic direction and advising them on the financial matters and how any decision will affect that business. They're looking at cash flow and discussing any moves and how it will affect it. They're talking about profitability and how changes or contracts or new SKUs, new lines of business could affect that profitability. They're having discussions, should we go into mergers and acquisitions? Should we invest money? Should we sell? Should we close this business down? They're providing that strategic direction that helps all the other executives make business decisions to drive the business forward. If the fractional CFO that you're using is not providing you with strategic insight and helping you make decisions and is a key player in that decision-making process, they are most likely not a CFO. They are a controller wearing a CFO mask. A CFO can do a lot for you, but the most important part of it is that a CFO really needs to help you think strategy. CFOs have a strategic focus. The CFO is a broad role, right? It takes on a lot, from the accounting side to the business side to the leadership side. But they are very highly involved in the decision-making, the financial strategy, risk management, and advising the CEO and board and all the other executives on financial matters. The scope of a CFO should extend outside of the accounting space and should be a part of your larger strategic business decisions. And most importantly, your CFO really should be a leader within the business, helping set the tone for your business strategic future. That's a lot about a CFO. And you're probably wondering, so how do I tell the difference between a CFO or a controller wearing a CFO's mask? And I think if you go back into it and you go, what is a controller? It'll help you get a better picture. And again, if I go back to my friend ChatGPT and say, what is a controller? It says a controller is operationally focused. The controller's role is more operational and focuses on the day-to-day management of the company's accounting functions. This includes overseeing the preparation of financial statements, ensuring compliance with accounting standards, and managing the accounting staff. The controller's responsibilities are narrower than those of the CFO, primarily revolving around accounting, financial reporting, budgeting, and internal controls. A controller is making sure that the history is recorded, giving you reporting on that, and then working on the short-term budgets and forecasts for that business that can be then used by the controller and the executives to make better decisions. They're generally building a budget based on instructions from above. The CFO is providing those instructions to build the budget going forward. So the big difference between a controller and a CFO is one is very strategically focused. That's the CFO. The other is very operationally focused. That is the controller. CFO is looking forward. Where is this business going? How can we drive it forward? Give me the information to do that. A controller is a lot of backwards looking, going, operationally, is my accounting process working? Are we getting the bills paid on time? Are we having money collected on time? Are we doing things to help match that strategic outcome of this business? It's important to understand that the CFO has a decision-making responsibility. And I've said this multiple times, but a CFO is involved in top-level decision-making and setting the financial direction of the company. The controller ensures the financial data needed for those decisions is reliable and accurate. Strategic versus operational, big picture forward, making sure that the historical information is accurate. You need the bookkeeper to get that information in, make sure it's accurate on time. Controller then ensures it's accurate. You have great controls in, collect money, pay things on time, make sure that the ship's operating smoothly. The CFO then takes that information from the controller, assesses that information, takes into consideration what we've spoken about strategic, and uses that to build the plan going forward. Bookkeepers record the historical. Controllers are very focused on the operational good controls, make sure the ship keeps moving forward. Your CFO then is looking out in the future and going, this is where we're going. What decisions do we need to make? Speed up, slow down, left, right. A provider like Protea gives you that information. I hand that information to a CFO and say, here's great, accurate, timely information. Use it to make your decisions. Happy to provide my insights on what I can see versus also the standards. And that's the benefit of working with somebody like us. We have a ton of clients, so we see a lot of information. And leave that to the CFO, the owners, to go use that information to make the best decisions to drive them towards their goals. I will never call myself a fractional CFO. You are only a fractional CFO if you're providing strategic insight and helping make strategic business decisions. If you're hiring somebody out there that they're promising you CFO level services and then charging you pennies, they're probably not a CFO. If you're working with somebody out there that's saying they're a CFO but can't talk about long-term futures and strategic plans of your business, you probably aren't a CFO. If you're hiring a CFO and they say they'll do the bookkeeping work, biggest red flag yet, they are not a CFO. That is not a good use of their time. And worse, if they're charging you $400 or $500 an hour. So be careful of that one. A fractional CFO is generally a small portion of their time and they're working with multiple people and helping those multiple people make decisions about the future of their business, how to be successful. A good fractional CFO will want a good accounting team in place. I pick my CFO partners by people who believe that good accounting information is important and do not want to get involved in the day-to-day information. A good CFO checks that information is accurate, demands the information is timely, and then gets out of the people's way. So at Protea, we are not fractional CFOs. There's a good chance there's a lot of people out there that have fractional CFOs that aren't really CFOs. But there are a ton of really good fractional CFOs out there. And I've met a few in the last week. People who are thinking big picture all the time. They're talking about the future based on the past actions of that business. I do believe businesses need good CFOs, but do not get duped into hiring somebody that isn't thinking strategically for you. And if you're in the wine space, I would happily put you in front of people that are fantastic fractional CFOs. More than happy to share their names. It's great for your business. But remember, you need a good bookkeeper, you need a good accountant, you need a good controller, you need a good tax provider. Protea can provide most of that for you. We are not fractional CFOs. We are accountants handling everything from controller down to bookkeeping. We record that history. We'll help you with your day-to-day operations. We'll keep you compliant and make sure that you have controls in place. That is what a good accounting partner does. If you want a good CFO, make sure they're helping you with the strategic side of your business. Happy Tuesday. Until next week, goodbye.